Hello guys, I got another question. How to avoid bad events? Okay, because it will affect our trades and our positions, and it affects also our money. Now, understand that when you buy something, whenever you buy, okay, you can't control your shares, in the sense that when you buy, a lot of people after you, they can sell short your shares. Other people, they buy other shares. Okay, so in general, you should accept this risk of being in the market. Now, like this event of United Kingdom leaving Europe or European Union, now they have a vote. So for you, since you get the news, you can sell your position and wait. If the result was bad, you are out of the market. You can't do that. Okay? There are other things where, for example, most of the time for earnings dates, a lot of companies, they announce the earning date. Now you have the information before that they will do a declaration, okay, of dividend, and if it is good or bad according to analysts think. So you are ahead. You can see, for example, the earning date before this with 1 day. You can sell your shares and then wait for the earning date, and then after that, the next day, when the earning date finish and it is consumed in the market, and then you can buy the shares again. But what if the earning dates? What if the dates are good for you, but you are out of the trade? You don't trade. You sell your shares and you wait. Now, this idea of being scared always is not good for you. If you are always scared about the market, and when you trade you feel frustrated, you don't accept the risk in general. So it's better that to stop trading and do something else. This is why I tell you this is my opinion, because the whole market is at risk, and sometimes you make money when you don't expect it. For example, when we have an earning date and the company earning date is better than what the analysts say, the stock high rocket, like what it happened to Facebook, sometimes to Twitter before, sometimes to Apple or Google or other stocks. When you get a lot of money, you are happy. And you say, I hope that I didn't buy only 100 shares. If I know I could put 1,000 shares to get more and more money of this earnings date. Now, if you lose, you say, if I know, I would never buy this stock. So here, it means that you don't accept the risk. And this is a dangerous thing in your future as a trader. In trading, you should bet on a stock and keep holding it until you see profit. If there is no profit, you are wrong. You just exit with a stop loss. Like yesterday, most of my students, if I tell you all of them, 100%, those who put stop loss, they get early. They have just little loss. It's okay. But what about the people who are stopborn? They don't put stop loss. What will happen to them? There are some stocks that that lost a lot of percentage. Now, these people will have a big loss. If you have 2 or 3 or 4 big losses in the year, you are done. Your account is wiped out and you can't trade anymore. But even if you have many losses, but they are small, you will never lose all your money. Your money is always there and you can trade more and more and more. Okay? So it's not to lose one time or two, you begin to cry. Crying and whining, before they say for girls, but I see men right now crying and the girls are happy. So it's the opposite right now what happened. And I see more girls, they are more courageous in the market than these guys. They say they are men, but I don't see any men here. Okay? And they ask me, whining, why this happened? What if I how can I do that? How can I not be in the market in bad thing? I say, man, this is the news. Okay? No one wants to lose money, but something happened in the market. You aren't here, you are sleeping, or you are working, or you don't know what's happened in the market, and things happen. If you put stop loss, you exit on time and early. Okay, it's your mistake if you don't protect yourself. That's why all my trainings that I do is just to help everybody to become disciplined. When you become disciplined, everything will be fine with you, and money is just, you make money on time when you acquire skills. And this is what we call to be like a disciplined, independent trader. You rely on yourself, you know what you are doing, you calculate your risk, and you just go with the market, and the market will reward you because you are a disciplined trader. For those who are living with hope and crying because of a loss, they will stay like this the whole life. I'm telling you that this, what happened on Friday, it will happen again. Not tomorrow, maybe not next week or next month or next year, but it will happen. Because it is one of the characteristics of the market to have corrections and sell-offs. Correction when it is small in the market, but when you sell off, it will be a long trend like what happened in 2008. So understand that these things that happen in the market, it will happen more and more and more. And you can't avoid it except when you are out of the trade, or you put stop loss, you exit early. That's why we use stop loss. If it's not beneficial for us, why we use it? Okay? But if you are just hoping that things will be fine for you and the market will be always doing good for you, this is a real problem. Let's drink some coffee here. So, if you don't like events and news in stock market, don't trade. Is it simple? Yes, it is simple. Don't trade. Because if you are getting scared of the news, maybe, I will tell you something, maybe the whole market is doing good, but the stock you buy, it goes down because of the company has bad news. Okay? So, it doesn't mean that it will be international news or national news that affect the stock market. The stock market is very, very sensible to anything. Why it is sensible? Because the people are crazy. Okay? Whenever they heard something, they get panicked. And this panic makes big problems in the market, and the price changes according to the panic of people. Okay? If right now, if they announce that a company will be doing bankruptcy, the stock, for example, is $100, it will be $1 tomorrow. Okay? Because the people panic and they want to exit very quick, not to lose all their money. Okay? So, it's just things that happen in the market, but it is natural. Understand that this news is natural. It comes each time. Okay? It comes each time, and it's part of the game. So, as I'm explaining always the game of stock market, I have made videos about the game of Wall Street. This is the game. Okay? Those guys, they don't buy or they don't sell something that it is theirs. They are out of it. But they take profit or advantage of some time because they have the power too. They have money. If you want to short a stock, but you don't have money to short it that much, you can't move it. But there are guys in Wall Street, they can move the whole market. Because what happened on Friday is a big deal. It's not someone who is having $1 million or $2 million, he can move the market. It's billions of dollars that have been sold short. That's why the market goes down that much. And since we can't avoid events, because we don't know the future, so either you live with the risk, okay, as a normal thing in the market, or you avoid the risk and you put your money into a bank. That's it. Even if you put it in the bank without doing anything, the value of your money with inflation, it goes down 3% each year. This is what we call inflation. It means your money is losing 3% each year if you put it like this without investment. But you can put it in some stocks and you get 15% or 20 or 30 or 50 or 10 or 5, depending on this stock's average. So avoiding the events is not a good idea as an investor or trader, or because you will be just whatever event you think, you take your money from the market and then you put them down. It's just to make volatility in the stock market, but you are doing nothing. Because one time you were sleeping and there is a bad event that happened. In the morning at 9:30 you open your account and you will find that it has a problem because there are bad news and you lose a lot of money. So this, it's not something that you can control. News, it just comes at any time. Okay? So even if it's not, as I told you before, even if it is not for the whole market, it can be in your stock only. Like what happened, for example, for Twitter. Twitter is going down for a long time. Okay? It's going down. It's people are fleeing from this stock because of the Twitter is not showing a lot of money as the analysts think. That's why some investors, they escape. They will come back when they see that things have changed. When those analysts or those people say good about company, some investors, they follow them and they buy again and the stock will go up again. But these events, like a correction in the market, it happens, it will happen, and it had happened before. So you can't change that. To be safe, you should put stop loss, you should be courageous, accept risk, and just do it. If you are scared, take your money from the market, put them in your bank, and buy. Okay? Just forget about stock market. That's it. Hope I answered your question. The guy who has answered me this question about how to avoid bad events. Now it's up to you. The market is always there. Even if you don't trade in 1 year, next year when you come, if God wills, you will find the market. Stocks go up, others go down. This is the market. Okay? Stocks are like a human. Some, they grow up in their intelligence, in their abilities, in their skills. And some people, they get sick and they get in their homes, they can't move and they have problems. And some, they die. It means bankruptcy. This is a real thing about life. Okay? And all the people are facing risk. no matter what you are, risk is always there. You are in good health, you are going to work, and you get an accident and you die. Okay, so do you think that if you know that in the future, in the next day you go to work, you will die, do you think you will go out? You will not go out because you know. But the future, since the future no one knows, so that's why you are happy and you are going to work and then you have an accident and you die. Okay? So you can't avoid that. Although you are the best driver in the world, but you are at a sign, stop, and someone hits you. Okay? So it has nothing to do with the skills or with the thing. When a major event comes, it comes. It depends on you where you are. Yesterday, I showed the other guys in my subscription, I showed them industries where stocks are going up and it is a buy. Okay? And the whole market was down. A terrible thing happened in the market. You see, it's where you are in the market. It's not the whole market. Someone was scared. Oh, the Dow Jones. I say the Dow is an index having 30 stocks. Now, your stock that you bought is not a Dow stock. So what are you talking about? Why you are looking at the Dow and your stock is not in the Dow? Why? S&P 500. It's 500 companies in America. 500. But maybe your stock is not in the S&P 500. Okay? Russell 2000 stocks. Maybe your stock is not in Russell. It doesn't mean that the whole index will go down, that it means that all the stocks 100% they go down. No. Almost go down, but some they will go up because there is a buyer. And the buyer was stronger than those short sellers. They shorted, but they lose money. So some people also, when they short stocks, they lose money because they think all the stocks are the same, but the stocks are not the same. It depends on who is on the stock trading at that day. Let's say a mutual fund is buying that day that stock. And he knows that the market will be down, so he takes a profit from that. And the stock will go down, and he is buying. He knows that the event will not stay longer. It's just a correction of the market. And then the market will go up again. In the normal way. So he profits from the stocks going down and then he buys. And then after a few days, the stock market will go up again from this correction and everything will be fine. Okay? But the problem is most of the time the investors lose a lot of money. And this is true. Because when they stay very long, sometimes they get some these corrections and sell off and it will hurt them. So that's why the investors, they don't buy one stock, so they diversify here and there just not to get the big hit in one industry. And as you might know, we are still in June and the year has not finished yet. We have 6 months of trading and swing trading and investing. So we still have time to make money. Okay? So thank you very much for watching this video. If you have questions, just ask as usual. Thumb it up or subscribe if you don't. Check my training. The website is always here on the top of the description, and my email. If you need any help or any question, just ask. And I will answer your question or your private email on time. Thank you very much and have a nice day.